Hey guys, it's that Dividend guy coming at you with the Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. Of course, the value by the metrics, the buying power, why that's going to be going up here before the end of the week, as well as how the individual stocks are performing. See if there are any deals within the portfolio, which it looks like there might be because there's a whole lot of red. But then, of course, going to take a look at the watch list being Google, Facebook, and Meta. I have a little bit of history with Meta. I could have bought it at 90 and I would have 5x my money. So I put it back on the watch list because it's one of those companies that I understand and I do really want to own eventually, but not at these prices. So it's going to be kind of like a Berkshire. I'm going to sit and wait and see if my ideal price ever hits. And if it does, I'll jump into the stock. So for today, we're sitting at $58,500 of market value. For that 1 week mark, we're down $1,300, a 2% loss. Then that 1 month mark, we are down right around a grand, down about 1.6%. 3 month mark, we're up $5,200 with a 9% return. Year to date, we are up $8,700 with a 17.5% return. That 1 year mark, we are up $11,800 with a 28% return. And then all time, we are up $23,218 with a 65.72% return. Buying power sitting at 197.37. That will be going up by the end of the week. And then jumping in, first off, Realty Income, the monthly dividend paying stock, sitting at 61.73, 171 shares, $10,500 worth of market value. Average cost is 65.02. 18% of the portfolio is in Realty Income. Today we're down $50. Total we're down $561 with a 5% loss. So we are right below our average cost here, about $4 below. It's a good buying opportunity here, but again, it is not going to be one of my big pillars within the portfolio. But the dividend is coming in every single month and growing. The O dividend now is going to be paid, of course, on the 15th of every single month, being paid $45.06 each month. So I love the great repetitive and reliable cash flow of this dividend aristocrat. But this is not going to be one of my big players within the portfolio. This is more of a retirement stock. A lot of retirees or people who are using the stock market to retire own this stock because it is a great monthly payer. I do love the business model and I like the big tenants that they own. They have great payment history and reliability. So that's why it's in the portfolio and about 20% of the portfolio. This is going to shrink over time simply because I'm going to put more money into other companies. Now, I don't dislike Realty Income. It's just not going to be one of my higher growth options. So I'm going to take advantage when it's a good buy, but I'm not always going to pour money into this position, even if it is below its average cost. So that's where I'm sitting at a Realty Income, sitting at 171 shares, but I'm not planning on pouring money into the position. So this is it's in that I'm happy with the total position size. This is just like AbbVie and T. Rowe Price. If it does drop way below my average cost, like it's sitting right now, it would make sense to purchase more. But as of right now, I'm more focused on Apple and Visa as well. So good opportunity there with Realty Income. Next up, we've got Altria sitting below $50 a share. 320 shares, right around 16K worth of market value. 47.27 is the average cost. 27% of the portfolio is in Altria. Today we're down $41. Total, we're still up $860 with a 5.7% return. Then, of course, the dividends coming in, I believe on Thursday or Friday, October 10th, of $326.40. That plus the cash that I have in the portfolio will be enough to buy me 2 shares of Apple. So it's fulfilling its goal here. I do think it would also be a very wise thing to do to reinvest into Altria, but I do think over the long term, Apple, of course, is going to outperform Altria. So even though the cash flow might go up a bit more with Altria, the whole goal of this portfolio is to use this month to buy next month. So if Altria is paying me, then I'm buying either AbbVie or Apple. And since I know AbbVie is above my average cost, more than what Apple is, I'm going to be pouring that money into Apple. So Altria does pay the biggest single dividend within the portfolio. And my goal is to bump up some of those smaller positions so that cash flow is not so heavily reliant on one single company. I am comfortable with the position size here as well. So I'm not going to be putting more money into Altria unless it really dips below my average. And then, of course, we've got CocaCola sitting at $69.09, still a little bit overvalued here for me. 15 shares of this Dividend King, $1,000 worth of market value. Average cost is $60.54. Right around 2% of the portfolio is in Coca-Cola. Today, we're down 16 bucks. Total, we're up nearly 130 with a 14% return. Now, guys, I am a very long-term investor, especially when it comes to my big three, which are going to be Apple, Visa, Coke, and then, of course, I'm going to put Google in that fourth spot, and then Berkshire Hathaway is number 5. And then Facebook's going to be number 6. If it swaps with Berkshire, I'm okay with that. But this is by far my favorite single brand that I have I've ever bought in my life. I've very much been a Coca-Cola fanboy for a very long time. I owned about 60 shares, and I did sell it when I felt like it was overvalued. And I do still feel as it is overvalued right now. My average cost around 60 bucks a share. That's where I want the company at to purchase more shares. So that's around where I feel like the intrinsic value is. Honestly, I feel like it could be closer to that 55 mark, but I thought it was well enough within that price range to just purchase more. But at 70, near 70 bucks, I'm not touching the stock. I will just keep getting that dividend and putting it towards something else. So even though I don't want to buy Coca-Cola at this price, I am very excited to own the company, to let it keep growing, and to use those dividends to buy more Apple shares. Next up, we've got Apple, ticker symbol AAPL at 222, down 5 bucks today. We have 6 shares, $1,300 worth of market value. Average cost is $210.88. 2.3% of the portfolio is in Apple. That will be going up because once that dividend is paid by Altria, I will add more Apple shares. Today, we're down $28 at 81 cents, 2% loss. Total, we're up 66 bucks with a 5% gain. So this is still well within my comfort zone when it comes to purchasing a stock at this price. I am going to be I'm going to be very honest with you. Apple will be the single biggest position, and I want to keep growing that. I want it to keep building my wealth. Eventually, I want to be a Apple / Visa / Berkshire millionaire. That's my goal. So this is going to be one of those that even if it does get a little bit above my average cost, I'm still going to be purchasing it. So even here, 10, 12 bucks above my average cost, I'm not super worried about it. If it was $2.50, I probably wouldn't be purchasing it. But at $2.20 to $2.30, I'm still comfortable. Next up, we've got AbbVie at $193.61, 95 shares, $18,300 worth of market value. Average cost is $95.19. 31% of the portfolio is in AbbVie. Today we're down 64 bucks. Total we're up $9,300 with a 103.4% return. Guys, originally I only had about 4,500 bucks in the stock. So I put in 4,500 and I have 93. So I've doubled my money essentially in this company, which is phenomenal. Plus, not only that, the dividend has gone from $1.07 to $1.55 on my 95 shares. So overall, the compound return is greater in my portfolio with AbbVie than anything else. If I was going to do like a back in time moment, I would have put every penny I had in AbbVie because that $4,500 would probably be closer, with it being doubled, I would probably have a $40,000 position in this in this portfolio with AbbVie if I just kind of consolidated all my positions and really bet big on this opportunity. It would be an even bigger gain. So overall, guys, I love AbbVie. It's been very fruitful for me. I'm just going to hold the shares at this, $95 mark. At this 95 share count mark and this $193 mark. I'm not going to be purchasing anymore. If it gets closer to my average cost, I will, of course, put more money into it. If it reaches around 100 bucks a share, I'm going to double down. I'm going to try to put as much cash as I can within that in that position. But as of right now, guys, considering it's such a steep value right now, I'm not going to be purchasing any more shares. But this is like the prime example of watering your trees and not pulling the weeds. So it's like a lot of people want to take the gains. Like I doubled my money in this position. I could easily take that and put it into Apple, right? And I have thought about that, but I do think overall, I don't want to destroy my garden, right? I don't want to take out the most fruitful tree I have as of right now. So in my opinion, right now, let's say I grew an apple tree and it's bearing like 2 apples right now. I feel like if I hold this for the next 5 or 10 years, it's going to just keep growing, right? The seeds are going to drop into the ground and they're going to be even more trees. That's what I'm thinking long term with AbbVie. So even if it's not going to be one of my big core positions that I'm constantly trying to build up, I do still want to put cash into this position if it makes sense. And one of the reasons why I am so comfortable with having a third of my wealth in a single position is because, keep in mind, guys, it didn't start that way. This was only about 10 to 12%, I think, something like that, a 10 to 12% position. So all the positions that I have right now that are in the double digits are only because I was so focused on those for a few years, which there was nothing wrong with that. They were great places to put my money at that point. And even some of them, like T. Rowe Price, may not be fruitful right now, but patience is key here in the market. And the way you really make money, like making those big compound returns, is by finding and analyzing a company that the market is incorrect about, that it's analyzed wrong, that it's being too harsh on, and capitalizing. So that's exactly what I did here with AbbVie. And I think it will continually be more fruitful as time goes on. I feel like this is one of those boats, like you could have bought Apple at like $12. Well, you could have bought AbbVie at $70, $80 and at least doubled your money, right? So this has already been a double bagger for me. I've doubled my money here. So it could be 10, 20 bagger in 5, 10 years, and I'd be happy with that. So overall, guys, love AbbVie. Even though it's not in my Apple, Visa, CocaCola realm right now, it's one of those that I'm always going to have an eye on. I just don't want to purchase at such a steep price. Then we've got Visa, ticker symbol V, at $273.49, down today. One share. Average cost is right around $270, so I would purchase it here. They do have a DOJ lawsuit going on right now, just like Google, and I'm interested to see where that ends up going, but it's not going to stop me from purchasing a lot of the stock. So as of right now, it's 0.5% of the portfolio, down $4 today, up $5 total with a 2% return. So this is very much in my comfortable buying position. This will be a $10,000 to $20,000 position. I want this to mirror something like an Altria or even an AbbVie given time. And Visa is one of those obvious dividend growers. It's like one of those no duh positions that I should have held. I bought a share back in like 2018. And that was when I first started investing. I did not analyze companies very well. I was very green when it came to trying to establish what I wanted from the stock market at that point. So I don't blame myself for selling it. I don't blame myself for, going in and out of stocks as I've aged, as I've changed and learned a lot more. I like my core holdings. The only ones that I would really regret not purchasing would be, one, I owned like 100 shares of GameStop at like $7 a share years before it plunged, years before it like went way up and then kind of plummeted again. And the other big one would be Facebook. I could have bought it at 90. I even talked about it, and I talked about switching out. At that point, it was VFC, but it would have been what that T. Rowe Price position would have been Facebook, and I would have like 5x'd my money on that at that point. So from then to now. So I see Visa as one of those opportunities that I want to get in now and just hold it, right? I mean, honestly, the metrics of the business are phenomenal. They have great dividend growth. They have great year-over-year growth. They have a very strong competitive advantage. They have the biggest payment network in the entire U.S. So and the margins are insane as well. So there's just so much going right for Visa. Even if the DOJ slaps it on the wrist a little bit, I'm not super worried about it. They'd have to take away a lot from Visa before I decide to not put my money into it. So Visa is going to be one of those, I think, Facebooks and AbbVies over time. And it already has for some people, right? Some people bought Visa like way back and like not even that far back. But if you've owned it for a year, you've made 17%. If you've owned it for 5 years, you've made 56% on your money. So it's like, this is one of those that the metrics speak for themselves, and I want to pour my money into this position as much as I can. So when AbbVie and Apple pay me, I'm putting it into Visa, right? And that's really going to be one of those core positions for me. Then we've got T. Rowe Price at 106. We have 101 shares. I just bought another share with dividends, so I'm at 101 instead of 100. Right around $10,800 worth of market value. Average cost is 109.66. 18% of the portfolio is in T row. Today we're down $155, 1.7% loss. Total we're down 306 with around a 3% loss. And guys, this is one of those that I feel like could be like AbbVie, where it's been really pummeled by the market, and I feel like people are judging it too harshly based on things that are not in the company's control. Interest rates have nothing to do with T. Rowe Price and their business. They're still raking in money. They're still getting fees from their assets under management. Maybe some people pulled out of their funds and they might have lost some assets, but the business model still works. The business model is still pumping out cash. The dividend is still at a relatively low payout ratio as well. So you're getting paid to wait for it to double. That's my investment thesis on this, right? They got punished because people pulled out of the market due to the T-bills getting a 5% rate of return, guaranteed, relatively risk-free. So people pulled out of any stock that wasn't going to pay them 5% or that they didn't think was going to pay them 5% over the next year to 2 years until interest rates changed. Well, those interest rates, I believe, are going down again. At least that's what the latest report has been that I've read up on. So if interest rates go down again, this stock is going to go up. So when interest rates go up, stocks go down. When interest rates go down, stocks go up. It's inversely correlated. So if people get back into T. Rowe Price, they're going to make more money, make more fees on those products that they sell, which are investment. They manage portfolios, right? They make essentially their Vanguard. So they build funds for people. People put their money into them, and then they just collect fees on that money while it makes their clients money, right? So overall, I feel like T. Rowe Price has gotten it's gotten bombed with COVID, the shutdowns. People were worried about their retirements. People had to pull money out of their retirements to fucking live. And T. Rowe Price was a victim of all of that extra outsourced, all that stuff that had nothing to do with them. They were very much a victim of outside issues, right? It wasn't their fault that COVID happened, and it wasn't their fault that interest rates changed. So I feel like this company has been in the very front of all the BS and has been very victimized when it wasn't supposed to be. They've lost a lot of market value when I don't think that was necessarily earned by T. Rowe Price, because any company in the financial sector had issues during COVID. Banks couldn't bump up their dividends. Banks couldn't reward shareholders with buybacks. There was a lot of issues when it came to COVID. And I feel like those, plus the interest rates, have really bombarded T. Rowe Price, and I feel like it's been misjudged. And over time, I feel like that the skepticism in the market is going to be the people who ignored that skepticism and all those headlines and all that BS that happened. I feel like they're going to double their money, and that's why I'm going to take advantage while I can, buy more at these prices. And even though it's not a core position, it's still going to be one of those that buys me more CocaCola in the future. So love T. Rowe Price, and I do think it has a chance to double here. And then of course with the watch list, guys, I want to buy Google at these prices. Facebook, I want to buy around 500 or lower. If I can get it at 90 again, that's kind of where I'm looking at, trying to get it like at 100, but I know it's going to take forever. It's going to take a huge drop, and I'm going to be excited for it. So Facebook's probably going to be on the watch list for quite some time. And then Berkshire, I owe myself 7 shares as of right now. So I will go ahead and purchase 1 share per year until 1 or 2 shares per year until I'm up to my 7. So Google, I'd buy at these prices. Facebook, Meta, I'm not touching for a while, even though I love the business. And Berkshire, I'm okay with buying it around, what's the 52-week low? Overall, I'd want to buy it around 400. So like a $50 drop. So right now, I'm probably more likely to purchase Google. But I feel like Apple, Visa, Google are the best 3 to buy for me right now. So that's where my capital is going to go. When I get paid by Altria, I'm going to be purchasing more Apple shares. So thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. And when you do, hit the like button so YouTube knows you like this video. Thanks so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.